Good morning. My name is Scott Redler, Chief Strategic Officer at T3Lab.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing relatively quiet markets around the world, with some markets up some markets down some. But in our markets, the big headline yesterday was the S&P made a new all-time closing high.
That might have been the headlines for the newspapers, but really it was the individual stock action that caught our attention. But like you said, overseas markets just quiet. Not every day is going to be a rock star day where things are breaking out and indices are on the highs. So a little digestion in China, a little digestion in Japan or around the world does make sense.
Right.
Because again, people don't want to feel like they're chasing the markets, but overall I would think up or down small is in stride.
Okay. Well, so before we jump into some of the individual stock action, because I know you said that's what it was really about yesterday, why don't you just show us the levels that we should watch in the S&P?
Okay, I think that's a good idea. That's what we do every day. Let's get down to it. We'll show you the different time frames. Let's go to the SPX, and you shall see, wow, what a surprise. A big trend that's been intact all year long. Another surprise is that there's been some maneuverability in it within these trends, which we had in these intermediate trends. You had right here the outside day in May 22nd, 5% correction, head and shoulders top, 4% correction, breakout failure, 3% correction, and then this has been the recent move that we've been navigating. Right here, the small little red dog reversal that came into fruition on October 9th. From there, engulfed this descending channel, and then bada beam, bada boom, all the way up to where we are now. So that being said, here's 1813. Here's where we stalled. I would think as long as we stay above 1796 and digest a little bit, no reason why this 1813 doesn't get taken out. It could be this week, it could be next week. Overall, I'm focusing on the stocks.
Well, yesterday it seemed as though we got some mixed messages from a lot of Fed officials regarding tapering, even though the expectation largely seems to be that they'll put it off until 2014. What did you gather from all of those messages?
That they're all on a different page, and that we shouldn't be so overly stressing about when they're going to taper. They'll taper when it's the right time, and at some point, good news will be good news, and we'll get off the the sugar rush that everyone keeps talking about. But the bottom line is this: the markets have been strong. If you emphasize or focus on the Fed or on all these headlines, you've probably been thrown off because there's been so many top callers and so many people saying, you know what, once they start tapering, the market's over. I personally think that we might have a little bit of a trickier year next year, but I do think that we're going to continue and we're going to have some ranges to navigate. And at some point, they will taper. If it's not December, it should be somewhere around the first quarter of next year, and then they'll take the foot off the gas pedal and put it back on based on the action. I do think a lot of people are a little bit too comfortable, where I think our biggest correction this year was 5-6%. Maybe next year, when we get one of those reversals, we get a 10-12%. But overall, long-term process, and also look for the patterns to make money where the relative strength is.
Well, in looking at those patterns, let's talk about social media, because last week we did outline some opportunities in the social media group, and yesterday it was the place to be, and Twitter actually led the way, 9% gain there.
What is Twitter?
You're definitely not on that.
Never. I'm not almost at 20,000 Twitter followers, which I want to thank everyone for the retweets and the value added on my Twitter stream. Well, anyway, with that being said, the stock had a really nice move yesterday, almost too fast and furious and unexpected. Last week we talked about 42. You look at where it is now, look at the chart. Here was at 42. That was a spot when it could have been a nice trade, which it was. This was another spot. Then after one day of rest on Friday, bam. So with that being said, bam. Is that what I just said, bam?
You did.
I did, and right now here we are at these old highs. What I'd like to see is some consolidation here. I do not really want it to trade through yesterday's high and go above 50, because it'll be just too fast, and I know for me it'll be uncomfortable taking any kind of size in it. So a little digestion right here would be good. Holding the top third of this last wide range bar above 48 for 1 or 2 sessions could give us enough confidence, enough of a platform to get a meaty move through the IPO highs that could actually be sustainable above 50 versus just trading through and maybe not having enough support to stay above it. But overall, really nice trade in the past 5-6 sessions. If you were in it, congratulations. If you weren't, put this on your radar. This should be in play and stay on your roadmap for next year.
Well, can't leave out Facebook. Facebook's also hanging in there, holding in well.
Yes, I think it's because my mom, all she does is Facebook, so she's increasing
keeping them in business.
She's keeping the traffic up. I think she might have bought something for the first time. But with that said, that was all on Thanksgiving. You go here and you look at the chart, and there's a lot of things to notice and to like. Okay, here's where I put that short-term top in at 54, but big deal, that was after a big move from 25. It was in this trend to the downside, correcting. And then what happened here? Oh my goodness, a red dog reversal at 44.04. A spot to cover some shorts, look to maybe get long. And then look what happened. Sideways commitment to that red dog reversal. So if you put it on as a swing here, you're looking good. If you were trying to trade this and navigate it, you waited for some sideways action and then pow. And now let's say we're going sideways again. So with that being said, above 49-ish or 49.40, it can continue. So the question is, who's going to get the 51st, Facebook or Twitter? Who do you think?
Ooh, I don't know. That's tough. Where's your money?
Well, right now I'm long Facebook because it's a little bit easier. It's not as extended, but I would like to do a trade with Twitter above 50. But, that would be nice in the next session or so.
All right. Well, I'll go with you on that one then. Let's talk about Yelp because it didn't get a potent breakout there yesterday, but did close above its 8-day EMA for the first time in a while. So what do you think about the composure of it?
It's a nice setup. This was one of those tight lower wedges that resolved to the upside because we weren't sure if it would correct more. It's had a monster 2013. So with that said, we're looking for tactics. Let's be tactical. Let's Yelp to it. Here you go is a nice little inside flag, breaking a little bit above it. Here's the moving averages. So with that said, this was trade number 1. Here is going sideways for potentially trade number 2. And I do think, the market continues to have a bid and social media stays in play. We could see 66 or so.
And LinkedIn still looking good as well, continue to hold higher after the nice rally that it had last week.
Yes, last week it played a little catch up. We were talking about it around 222, and now it's holding above 228. So if we look at the chart, if it continues to hold above 228, right around here, which is what this little descending channel has been, okay, we could see sideways action and it can continue. Here was a nice tactical trade for December, in this December to remember, and now you have some upside action. So at this point, let it hover above 228, and then I do think it can continue.
I'm a Groupon. Nice move up, registered almost 6% gain, closed back above its 21-day. I mean, I believe this is what you call a day one.
Yes, it is a day one. So, if you haven't been involved, I haven't been in this stock in a long time. I don't even think people use it as much anymore. Do you use Groupon?
I do subscribe to the emails. I keep my eye out for them, but I don't use it religiously or regularly by any means. But
okay, well, I
always have an eye out for the deals.
Yes, you have to, right? One eye on the deals, one eye on the handbags, I guess, or something like that. Whatever. Day one here on Groupon, inside little range here. This was day one. Maybe we get day 2 to $10 or so. I did dabble a little bit yesterday, and I think that it could continue. So we'll see what happens there as something to do for December.
All right, great. Well, coming up, we're going to go in the trenches with high beta tech stocks. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back at Going in the Trenches with high beta tech stocks. Let's start with Apple. 2 days of rest and then a nice bounce back.
Yes, I came in yesterday flat Apple, and it was up a little bit. I went after it quick. I like yesterday's action. I think that we can see some new commitment to it. So you go to the chart here. This chart's been very good to us over the course of the past 6 months. You look at this lower range that we talked about for a while when it finally ignited two quarters on earnings. Quick move up, retest, nice tight consolidation for a move, and then we had a lot to be thankful. Breaking above 526 for Thanksgiving. Now you want to take a closer look here, and you will see that it is flagging. You had 2 down days, which was nice because it was extended from the 8-day. We wound up holding in here. I don't know if it's going to have enough power just to break back above this 569 today, but I think as long as it stays above 564-ish and goes sideways, at some point prior to Christmas, we do see new 2013 highs.
All right, and we've been talking about how Scott's been waiting for that potential breakout in Baidu. We got a nice move yesterday through the 170 resistance level, which it closed above. So what do you think now?
You know what? I went back to it. The old red dog wouldn't have went back to it. It would have said, okay, I lost money each and every time. So it was a good trade there. It still wasn't that great. The power wasn't as powerful. And if you look at the chart, it did break and close above, so I do have some. But I would have liked it to close a little stronger. So who knows? Maybe today it extends. So this was your inside range. This was your break above this 170-ish, close 170, 190. I think stay with it as long as it stays just say above 169.5. That could be your stop. And if it were to trade above 173.65, let's see if we get a little bit more added bonus to this Baidu breakout.
And Google continues its climb on the road to 1100, tacked on an almost 1%, put in a new high at 1082 yesterday. Is it getting extended though?
It's a little extended. I've seen things get more extended, and this stock's been really good to us since earnings. And it's almost like a technical analysis 101 playbook if you look at it. So you go to the chart of Google. You know, we've gone over this in so many of our courses about a pro gap. Look at the size of this gap after earnings. It did not even try and test it. So what happened here, you had a nice little trade with this bull flag, gave you a quick little move for extra cash flow. Then it consolidated with a descending channel here that broke to the upside. And then remember this little breakout failure, pulled in a little bit, but it held the top half of this one. And then this was a nice clean move right there. Consolidated, went again. Why not see 1100? The question is, how do you maneuver it? And right now, I am not involved.
And Amazon still hovering around the 8-day, which is good, but showed some relative weakness yesterday. So does it just need a little bit of a break?
You know, it got rejected by 400 about, I think, a week or so ago, and now it's trying to hold on. I think overall it's fine. You look at the chart. This stock usually gets me. This was your last tight setup when it broke above 373. Here is your small little, outside day, so to speak, and it's pulled in a little bit. So you have an inside range. Some people who are trying to stay long it verse this, actually a little red dog reversal here, but verse just say 381. And I guess if it were to get back above 390, it could be back on its horse for a move above 400. It's not, I would say B- setup here, but above 391-ish, the shorts start getting nervous again.
All right, let's do some quick hits. Let's talk. Bank of America continues to build a base around its 8-day. Is it gearing up, do you think, for a potential breakout to new highs?
I do think at some point next year it's north of 20. The question is, how does it get there? So it's going to have to go through 16 first. You look at this chart. A month or so ago, this was your nice little breakout move to get us back in the game. Now it's consolidating again. I will say if you're in tier 1 right now, it'll start looking better if it can get above 1572 and stay above it. And then you have the recent highs here around 16. If you're really short term and you don't like to hold things that break upper levels, you could put your stop in at 1536, but overall it looks fine.
And checking in on the metals, gold is bouncing back a little bit. Do you think that can be sustained?
You know what? I thought that perhaps it could retest the lows in June, but as you saw by the VTF, I wasn't short it. Anytime you get big moves to the downside, I'm not there for that, a little extra juice to the downside. But I think some people are, and they're getting a little caught in the short side. So with that being said, if you do navigate gold on the short term, take a look here. You'll see that there's a small descending trend line here, okay, that it could break above. So with that being said, 121 is pretty big. If it can get above and close above it, you'll probably see some shorts get squeezed, and maybe you can even get a move to 124 to 126, which would be a decent trade, going into the new year. But if it gets rejected by 121, then perhaps you see, the June lows. So for me, I actually went with the GDX yesterday, just a little bit easier to navigate. You look how it broke a little bit above this lower level here. I don't think it's going to be a blockbuster trade, but I have some on the VTF, and if it could work its way up to about 22-ish, I think that would be a nice little tactical cash flow trade.
Well, and we've talked a lot about your 2013 theme of going long TBTs, and they did just have a 2-day pullback, but nothing to worry about. Everything remains intact.
Well, I think because it seems like we're not going to taper in December, they've been a little softer. I've talked about either trading these things, shorter term, or just put it in the drawer. And, for the year, it's up pretty nicely. You look here at the TBTs, you'll see that from the lows here in April, you had a really nice move. It traded above the resistance here of 70 and went as high as almost 83. From there, this upper, just a trend line got broke, came back in, retested this breakout. Some people got long down there. And now it's, it's kind of just hovering. It's creating another little trend line here. It's getting tighter. I still think if you have no exposure to this and no exposure to rising rates next year, you can buy some in this area. And then at some point next year, this takes out 82.80. It's just a matter of how, a matter of when. So with that being said, put it in the drawer and don't overdo it. If you want to overdo it and you want to trade it, I guess if it starts getting above 80.17 with a nice close above it, then perhaps it gets in motion for some momentum for the active guy.
So after that 2-day pullback, even now would be a good level to buy in if you don't have any exposure?
I don't know when it's going to turn up, but I think if you have no exposure and you're going to just put it in the drawer, it could go a little bit lower from here, but do it because at some point next year, I think in my humble opinion, it'll be higher.
All right. Well, so tell us what you'll be focusing on today as we begin the trading session.
Well, yesterday I came in flat, and I think I came in today with 7 longs. So I'm going to look to see how I can massage those positions, see what might need to digest or what can continue through yesterday's highs, see if anything else pops up. I'm trying to go into each day with just level head and low expectations. Yesterday wound up being a great day when I came in thinking there wasn't that many things to be so excited about, but it turned differently. So today I'm not going to be overly excited because of what happened yesterday. I'm going to take it in stride. We went over a lot of good setups. Social media, I'd like to see it rest maybe 1 or 2 days, but it might not. Apple, nice day yesterday to put it back on the map. Maybe we get a little bit more of a bounce back in the metals. Banks still seem a little lethargic, just building upper level areas to perhaps go higher from. And, again, the S&P holding higher. I think 2 levels, 1806 would be a short-term spot to watch, and then I really don't think you get excessively bearish or short on the brain unless we break below 1796, which is that intermediate spot, which would break down some of the commitment to the jobs Friday.
All right. Thanks so much, Scott. Happy trading, everybody. Have a great day.